On May 22, 2010, a Florida programmer named Laszlo Hanyecz bought 2 pizzas for 10,000 Bitcoin. He paid about $41. At Bitcoin's peak in 2021, those same coins were worth $690 million. By the end of this video, you'll understand exactly what Bitcoin is, how it works, and why that pizza story isn't just a fun trivia fact. It's a window into something quietly rewriting the rules of money. And the last part, it involves one of the greatest unsolved mysteries in the history of technology. So grab something to drink and let's get into it. Here's the simplest way to understand Bitcoin. Think about email. Before email, sending a message to someone in Tokyo meant going through a postal service, a middleman you had to trust. Email cut that out entirely. You send, they receive. Direct, instant, free. Bitcoin does the same thing, but for money. Before Bitcoin, sending money to Tokyo meant going through a bank, a trusted institution to move your funds, take a cut, and decide whether you were allowed to. Bitcoin lets you send value directly, person to person, anywhere on Earth, within minutes, without asking anyone's permission. That's it. That's the whole idea. Here's the detail that changes everything. There will only ever be 21 million Bitcoin in existence. That number is hard-coded into the protocol. It's not a policy. It's not something a board of directors can vote to change. It's math. Compare that to the US dollar, which has lost roughly 97% of its purchasing power since the Federal Reserve was created in 1913. Bitcoin was built, from its first line of code, to be the opposite of that. And in the very first block of data Satoshi ever created, the Genesis block, mined on January 3, 2009, there's a message embedded inside the code. A newspaper headline from that day, Chancellor on brink of second bailout for banks. The 2008 financial crisis had just hit. Satoshi was making a statement. That message is still there today, permanently recorded in the blockchain, readable by anyone. It reads less like code and more like a manifesto. All right, so that's what Bitcoin is. Now here's how it actually works, and this is where it gets genuinely interesting. Every Bitcoin transaction ever made is recorded on something called the blockchain. Imagine a shared document that millions of computers around the world can read simultaneously, but no single person controls it, no one can delete entries, and every addition is verified by thousands of independent machines at once. That's the blockchain, a shared record of truth that doesn't require trusting any institution. Your bank asks you to trust them to track your balance correctly. Bitcoin asks you to trust math instead. New Bitcoin are created through a process called mining. Computers worldwide compete to solve a complex mathematical puzzle. The first one to solve it adds the next block of transactions to the chain and earns freshly created Bitcoin as a reward. To fake a transaction, you'd need to redo the math for every single block ever added, faster than the entire rest of the network combined. The network currently runs at 500 exahashes of computing power per second. Faking it is mathematically impossible. Every 4 years, the mining reward gets cut in half, a built-in event called the halving. In April 2024, it dropped to 3.125 Bitcoin per block. Less new supply entering the market, same demand or growing. Basic economics does the rest. Here's a story that shows what this technology actually makes possible. In October 2020, Nigerian authorities froze the bank accounts of protesters involved in the End SARS movement, demonstrations against police brutality. A group called the Feminist Coalition, organizing relief funds for protesters, suddenly couldn't access their accounts. Within days, they switched to Bitcoin. They raised 13 Bitcoin, enough to keep funding the movement. The government could shut down a bank account. They couldn't shut down the blockchain. That's not theoretical. That happened 4 years ago. If this is clicking for you, hit subscribe. I put out videos like this every week, and the next part is the one I've been saving. Nobody knows who created Bitcoin. Satoshi Nakamoto, the name on the white paper, is a pseudonym. From 2008 to 2011, Satoshi communicated through emails and forum posts, wrote in fluent British English, and then, in April 2011, sent one final message to a developer. I've moved on to other things. Gone. Completely. Here's the part that's hard to wrap your head around. Satoshi's wallet holds approximately 1.1 million coins. At the 2021 peak, that was worth around $73 billion. Not a single coin has ever moved. Not one. The most human thread in this mystery runs through a man named Halving, a cryptographer, a legend in the cypherpunk community, and the first person to ever receive a Bitcoin transaction. Satoshi sent him 10 Bitcoin in January 2009. Finney was diagnosed with ALS that same year. He kept working on the Bitcoin network from his hospital bed for years until he physically couldn't anymore. He wrote on a Bitcoin forum in 2013, "I'm comfortable with my legacy. He died in 2014. And because he believed in futures that hadn't arrived yet, he had himself cryonically preserved. He is frozen in Scottsdale, Arizona. The first person to ever receive Bitcoin, suspended in time, waiting. Think about that. The man who received the very first transaction from someone who then vanished forever is himself frozen, waiting for a world that doesn't exist yet. Bitcoin was always a bet on a future that hadn't arrived. Hal Finney took that bet literally. In January 2024, the SEC approved the first Bitcoin spot ETFs in the United States. BlackRock, Fidelity, the largest financial institutions on earth. BlackRock's fund hit $1 billion in assets in 4 days, one of the fastest ETF launches in history. Jamie Dimon called Bitcoin a fraud in 2017. By 2024, JP Morgan was offering Bitcoin funds to clients. Bitcoin has been declared dead by mainstream outlets over 470 times. There's a website called Bitcoin Obituaries that logs every single one. Every time, it came back. Bitcoin isn't really a story about money. It's a story about trust. What happens when people stop trusting the institutions built to hold their money and build something that doesn't require trust at all? A Venezuelan who kept their savings in Bitcoin during hyperinflation that hit 1 million%. A Nigerian protester whose donations couldn't be frozen. An Afghan woman who held her savings somewhere no checkpoint could reach. For them, this wasn't speculation, it was survival. So there you go. What Bitcoin is, how it works, why it exists, and the ghost at the center of it all, who may be watching $73 billion sit untouched, just to prove a point. If this video helped, share it with someone who's been meaning to understand this stuff. Subscribe so you don't miss the next one, and stay curious.